Well, to the moon and back. Bitcoin skyrocketing over 150% in 2023 as anticipation for spot Bitcoin ETF approvals renewed inflows. But since then, the price has been dropping, falling over 10% since the ETFs were given the green light by the SEC earlier this month. Global Bitcoin payment company Strike continues to bet that cryptocurrencies are the futures, and Jack Mallers, the Strike CEO, is here to break down what the moves are like on that platform as well. Jack, great to have you here with us today. You know, one of the huge things, even coming off of last week, there were some shots fired at crypto and Bitcoin specifically. You had the JP Morgan CEO and chairman Jamie Dimon calling it essentially pet rock, and once again calling into question its worth and its value here. I would love to get your reaction, especially as some of the financial industry elites and figureheads are continuing to cast some doubt here.
Yeah, thanks for having me, Brad. What do I think about Jeffrey Epstein's banker being concerned that a distributed, decentralized, open public money could potentially be used for bad things, sitting on a ski resort in Davos? I don't really care. I don't know why anyone cares, right? I mean, that guy knows when money's used for bad things. So it's a weird opinion of his. And my pet rock was up, as you said, 160% last year. It performed well against the dollar. So I don't know. I don't really care what that guy has to say about Bitcoin. I don't know why anybody does.
When you think about Bitcoin and transactions that we're seeing, and a lot of the focus, at least coming into last year too, was not just what the ETF approvals would look like, but what also the utilization from here would look like moving out of the crypto winter. What type of utilization are you seeing?
I mean, first of all, Bitcoin's this open public digital infrastructure for the world. So you see utilization all over planet Earth for all sorts of different things, right? Anyone can do whatever they want with it, which is part of the beauty and part of the attraction. I personally think that the killer use case we'll see over the next few years is the fact that all 8 billion human beings on the planet face fiat debasement. That means that their government's local currency loses value persistently. And global debt to GDP is what, 360% right now? So I mean, everyone has to own something else. And I think the killer use case over the next few years is going to be owning something that they can't make any more of. And so that's why I think Wall Street's attracted to it. That's why I think you've seen a price run up, is because, I mean, even gold being bullish in the face of a hawkish Fed, the world is concerned with the treasury and the bond market. The world is concerned with the debt that governments have accrued without any growth. And they found this thing that's free to hold, that's scarce, that you can put in your brain. And it's just the killer app. It's the best expression of fiat debasement that literally everyone on the planet has to face. So that to me is the killer app. And then, people make payments with it. People do all sorts of stuff with it because there's no central governing party to tell them not to, which is beautiful. It's pure humanity.
Well, Jack, it's Johnny here. It's good to see you. I'm curious to get your perspective then on regulations. There's been lots of talk about what exactly that is going to look like, whether or not that would be a bullish thing for the industry, whether or not it's going to hold the industry back. Where do you stand on regulation? And I guess, what are you expecting to hear from lawmakers, to hear from regulators here in the U.S. this year in terms of the movement that we could potentially see?
Yeah, so to be clear, me personally and my company, we are a Bitcoin company. I'm a Bitcoiner. I think crypto is a load of garbage. I think it's generally a distraction to what this technology and this movement represents and is here to change. And so how the world is going to sort out the fact that some kid named Vitalik Buterin printed a lot of coins in his basement and then pre-sold them to people and has been promising all sorts of crazy things that have never happened. I don't know. Is that a security? But I guess the point is, I don't care. Everyone knows that Bitcoin has regulatory clarity, that Bitcoin is now officially on Wall Street, that Bitcoin is distributed, it works, its monetary policy has never changed. And that's why I'm here. I'm here to change the world through Bitcoin and push Bitcoin as far as we can as humanity and society. So the regulation on, I think altcoins are arbitrages on this trend. I don't think they'll be around, by the time I die. I imagine, what is Dogecoin going to do for society over the next 20 years? Come on, what are we talking about? So I guess I don't really care. Bitcoin has the clarity it needs. And I think it's going to be a $5, $10, $20 trillion asset over the next 18 months.
Jack, you mentioned Vitalik, of course, the Ethereum co-founder. When you think about what we've already seen with the spot Bitcoin ETF and a lot of attention now pointing towards whether we will see an Ethereum or an Ether ETF come forward, do you believe that that's like the next kind of dam breaking type of moment to really thrust even more institutional knowledge and even more institutional investment and inflows into crypto as a whole, even though I know you just said that crypto is a load of garbage?
Yeah, crypto's loaded garbage. Jamie Dimon was Jeffrey Epstein's banker. Like, a lot of this stuff is just noise, pure unethical, malicious noise. My opinion, guys, again, is that global debt to GDP is 360%. What does that mean? The governments have piled up so much debt with no way to pay it back. So who's fronting that bill? I mean, someone's run up a $36 trillion bill at the bar. Who's paying for that? And the answer is whoever's holding the currencies that they can debase, that they can print more of. They have to issue more debt and print more currency to pay that bill. And so everyone has to find something else to hold. Do I want to hold Ethereum? Ethereum's a tech play. Ethereum's a gamble that Jamie Dimon's going to use it. What did he say in his ski resort Davos interview, that he's going to use it to flip real estate? What does that even mean? That doesn't mean anything. I was around. I mean, people don't know history. I was around when Ethereum got hacked, and that the Ethereum Foundation cherry-picked transactions. They were like, oh, we broke something, so that transaction doesn't exist. We're going to change the monetary policy here. That's what I'm going to do to hedge the Federal Reserve and the fact that they got to front a $37 trillion bill? Yeah, no thanks. And no one on Wall Street thinks that either, right? Bitcoin is the actually only innovation that is attractive to solve what is the biggest financial problem ever, which is central banking. So Ethereum is a tech play. And if Ethereum turns into the new Tesla, like a stock, like an equity, great, sure. People are going to get stimulus checks and they're going to go punt Ethereum and bet that Vitalik is the new Elon Musk. But it's not a new world reserve currency that everyone can use to escape the fact that we're all going to get debased, because over the last 100 years, governments accrued so much debt that we're in serious trouble. I mean, the last thing I'll say, guys, the bond market has never been this bad. The 60-40 portfolio that's so safe, bond holders are doing way worse than this guy who just casually owns Bitcoin, right? So this is a massive problem. And no, I don't think Solana, Ethereum, Dogecoin, no, I don't think that matters. So.
Right. I think, and we've got a lot to think about here, but it's also the volatility that the average investor can incur in their portfolio, at least in the interim period of time, that we also have to consider within this. Jack, we appreciate the time here this morning. Strike CEO Jack Mallers. Thanks.
Thank you, guys.